very topical nowadays, and everybody wants to learn something another in this. That is SME IPO, from pre-IPO preparation to listing. Friends, as you are aware, the SME IPO emerged as a powerful alternative to traditional bank financing and venture capital private equity dependence. Because when we are thinking of any business, we think on these two aspects, that either you will get money from the loan or bank finance, or you will go for venture capital or private equity, which are a small things. But now, this particular aspect of SME IPO is transforming Indian SME landscape by enabling access to the Indian capital market. SME IPO empower business so it can fuel growth, enhance credibility, and reduce funding constraint. Because everywhere when you want to expand your business, you require fund, and because of the fund, you are always not able to do what you want to do. So this is new era of entrepreneurship, which is in the shape of SME IPO, is fueling growth. In the webinar today, we will understand an end-to-end process. We will see that how an SME IPO and what are the preparation, what are the critical point, what are the steps, what are the document, what are the compliance requirement, and very interestingly, that we have invited the stock exchange officers. They are handling the SME IPO. So we will listen from their point of view that when you are doing this, what preparation you should do. So today's key point which we want to discuss, that is the introduction of benefit of SME IPO. That is number one, why we should do. When our company is ready for IPO. Pre-IPO planning, what are the pre-IPO planning? Documentation and due diligence, what are the documents you require? And the listing process. And after that, that is the most important, which normally people forget, that post-IPO compliance, because IPO is not giving you the free hand of money. It has a controlled observation also. Friend, for today's webinar, we have invited very learned panelists. First, I welcome Mr. Avishkar Naik. He's a Senior Vice President in Listing Division at National Stock Exchange. He has been working in NSE for the last 20 years and has headed various departments such as investigation, surveillance, clearing, corporation, technology, and listing. He has been awarded CA Professional Achiever Award by ICAI. Avishkar is one of the very prominent person in the stock market, and he is steering this SME IPO growth. I welcome Avishkar for this program. Then we have Ms. Radha. She is Srinivasan. She is heading a listing of SME BSC Limited, a capital market professional with post-qualification experience of 3 decades in the field of investment banking, with strong foothold in due diligence, leadership qualities, and result-oriented approach. In her personal role, she heads the listing and SME department at BSC Limited. She observed the operation of the listing department, facilitating the listing of companies at BSC, including the BSC SME platform, as also in the newer issuance of the debt market, like corporate bond, money market, instrument of primary and secondary market. She contributes policy making and regulatory framework and development, and closely coordinating with the listed companies. Prior to joining BSC, she was working for over 30 years in various companies operating in field of investment banking. She is well versed with SEBI regulation related to capital market and presently heading the SME segment of Bombay Stock Exchange. Radha Madam is coming first time. I welcome her for our webinar for today, and definitely her experience and her knowledge will definitely give a way to all of us to understand. Then we have Harshad Darod, is a Chief Manager Listing NSE Limited. He has been more than 11 years experience in NSE, and he has earlier also came for the webinar. I welcome Harshad, and I expect that your experience will definitely helpful for the participant. Welcome, Harshad. Then we have Manoj Kumar, partner and head M&A and transaction advisory, corporate professional. And Manoj is heading the IB investment banking division of corporate professional. And he is working on more than 10 IPOs of SME at different stock exchanges. I welcome Manoj, and your experience or your knowledge of preparing companies will helpful to all other people what they should do. Then we have a Sanchit Vijay, partner head, deals and valuation, corporate professional. Sanchit will explain the valuation part of the IPO. Then we have a Ruchika Sharma, associate partner, corporate professional. She also handle the IPO process, and she prepares company, helpful to them, preparing DRHP and entire hand holding up to the IPO and then IPO preparation and then listing and raising fund from the market. Ruchika, I welcome you. Then we have Mr. Shivanshu Birla. He is founding partner of Makia Capital, is a AIF registered with SEBI, Category 1 fund. And Shivanshu will also interacting with various budding promoters, and they will do this. Friends, as you are aware that MSME is one of the biggest movement. And the note today, what is happening, MSME contribute 30% of Indian GDP, 45% of exports, and less than 0.1% have access to capital market. So the point is that by introducing SME IPO, though it has came in mid 15 and 16, but that time people were not very familiar. They were not encouraged, and the ecosystem was not developed. But now this is making a movement toward formalization, transparency, and entrepreneurial dignity also. So the best part is, which is happening, that democratized capital access will unlock the new economic tire and boost India's target of becoming 5 trillion economy. No doubt, the game of MSME will also change, because MSME always puzzle because they have a business size is not up to the mark. They have asset that is not fulfilled. So they require always fund for growth, fund for business, fund for expansion, or anything else. They require fund for working capital, reducing costs. All these things are there. But by doing this, this empower self-reliant investor-ready MSME. It reduce overburden on high-cost private equity or restrictive collateral-based banking lending, because if you don't have asset, you can't raise fund. Enhance valuation, brand visibility, and corporate governance. Encourage generational wealth creation and not just the revenue growth, because when you are going for listing, it is continuously taking a new shape. Then the most important thing is that when you are going for IPO, it is not the IPO fund. It is IPO help you to create your brand, which will not, if you invest money in the market, you cannot reach to the entire country. By doing a SME IPO, you can reach. Then it is also a nation building impact, because it creates vibrant secondary market for MSME, attract retail and institutional investor if the company is growing, and India's growth engine beyond just large cap, and then strengthen regional entrepreneurship, because today you are seeing the business from Visakhapatnam, Meerut, small cities, 2-tier cities, they were giving their entrepreneurs coming in this business. So this is also creating. Now, friends, IPO is not an event. It is a journey that you have to understand. It is not that one time you just do and raise money and then you forget. It is a journey, and journey brings lots of responsibility also. So today you start and tomorrow you will be ready. So now for doing this, you have to, as a promoter, as an entrepreneur of MSME, you have to understand first, you have to change the mindset. From a proprietor mindset to the public market mindset. That is that you are not the owner only. The other person, if you are diluting 25%, which is compulsory, then the other 25% shareholder is also your owner of the company. That mindset should be there. Invest in building a broad driven governance backed and process oriented culture, because it is not that you have raised fund and you sit idle. You have to do compliance, and SEBI is always giving the rules regulation. You have to follow this. Then you have to start early preparation. Suppose you want to go, start now, launch later. This is not that you are doing today. So you have to prepare financial reporting. You have to work out that 2 3 years financial. You have to do compliance point of view. You have to make it structuring. You have to do leadership. You have to create documentation. You have to complete merchant banker. You have to appoint and keep the readiness. Then the issue comes, I need more than 100 crore. I need to be 100 crore company for IPO. It is not correct. The SME platform allows smaller promising firm of 10 crore also can bring out. IPO means giving up control. That is also a myth. No smart structuring, and smart structuring always structure, and you can control this business also, and you can get listing also. The capital is always costlier than the loan. That is also one myth. Then the important message is, for decade, Indian MSME has powered the economy in silence. Because if you see the GST, highest GST paid is coming through this sector also. Employment is coming from this sector. So through SME IPO, we are giving them a microphone, the stage, and the spotlight they deserve. That was missing. The day an MSME founder rings in the bell in the stock exchange, it is not just a listing, it is the rise of Indian inclusive economic future. That is the important thing. So, friends, today we will discuss all these points, all these issues in this, and we have requested our learned speaker from the stock exchanges. So, I will just tell you what will be the structure of our program. What we will do first, we will request our guest, Mr. Avishkar, Ms. Radha, and Harshad to explain to us about this particular concept of what they are facing, what they advice they want to give to the uh, promoter or the industry or the merchant banker, that what types of things uh, they are receiving. Their majority companies are coming with full preparation, but sometimes something is missing. So they both can tell us. And after that, Manoj and Ruchika, Sanchit and Shivanshu will tell you how to make a preparation. So let's first listen from the stock exchange side, that what are the issues, what are the points, and how things will be prepared. Before giving the further program, I just want to inform the 27th June 2025, we are having our next webinar on securities market, and the announcement and other thing will send it to you shortly. So 27th June, our next webinar will be held. So now I will request Radha Madam, first you speak on this. Harshad, Avishkar is joining.
Sir in some meeting, so he told that he'll be joining
Okay.
if it's
So
okay for you.
let me just start with Radha Madam.
Yeah.
Radha Madam, welcome for our webinar. First time you are coming. So welcome, and I will, because you are handling the SME IPO in this Bombay Stock Exchange. What are your points? What preparation should do, and what our message you want to give to the industry and the people, those who are planning to do or those who are coming to file documents and bringing out IPO. Over to you, Radha Madam.
Good afternoon, everyone.
Good.
And at the outset, I would like to thank Pawanji for the introduction and for giving BSE an opportunity to participate as a speaker in this webinar. I have joined this BSc about 11 months back. I have an over 3 decades of experience in the investment banking sector, being on the other side as an investment banker. And this topic of SME is very close to my heart for all obvious reasons. Pawanji has also mentioned. See, SMEs are always the backbone of India's economy, making a strong contribution towards GDP, towards exports, and around 60% of the working population is employed in the SME sector. So that's a huge contribution that this sector gives in. And what we feel is ki today raising funds through capital market is also one of the very good opportunities for good SME companies. And hence, I would like to take this opportunity to speak on certain initiatives that SEBI had started this exchange, this SME exchange. It's a carved out a separate SME exchange, both on the BSC and the NSC. In 2012, we had started, and it's been 13 years over. But frankly speaking, there is not much of traction, I would say. Both
Yeah.
the exchanges put together, there are only about 1,200 companies which are listed. And as of date, also, if I see, there are over 6.3 crore MSMEs that are registered on the Udyam platform. So there is a huge, huge potential for this, for good SME companies to come and understand the capital market and list on this market. So, first of all, I would like to share certain concerns which we face all through the process when we at the exchange are processing the SME documents. And also, I would like to mention that BSC, along with various other industry connects like the FICI, CII, ICSI, ICAI, have all been conducting various seminars for companies who choose to come through this platform and list the company on this platform. I would be more than happy to reach out to any one of you on a one-to-one basis. Pawanji has my contacts, and Pawanji, you can give it to any one of them, so that any process-related doubts or anything that you require to know about this platform and any advice that you want from our side can be given, and I'm sure we can guide you better. And I'm saying this because I've been on the other side, and I'm quite sure that I can do that. So at BSc, we have also started an initiative of using generative AI for processing the offer document. Whenever the offer document is filed with us, we see that a lot many common concerns are there which are not generally covered by the merchant bankers when they prepare the document. I'm sure somebody will take you through the process of filing the document, but I'm just giving you our perspective. So what we have done is, in fact, we have started giving the process of AI to the merchant bankers who can whether what and that AI checks for the general eligibility criteria and of the exchange of the ICDR regulation and our standard set of questions that is to be answered through the what is the requirements of the document. So all these as is a pre-check. And so once these pre-checks are done and the document is filed, so our timelines for processing of the documents also is reduced considerably. We have in the past, I would say within 45 days to 2 months of filing a document, we have cleared them. And so SMEs are able to raise money at a faster pace through this process also. So, and now I would like to just quickly take you through the concerns within the major areas. See, I understand that when it's an SME, so you cannot normally compare it with any other main board or other bigger companies. They may be in a partnership format or an LLP, or a proprietary format also. First, they have to make this as a limited company. That has to be the format that has to be registered as a limited company. But what happens, when these companies are small, not much of a compliance is there in these companies. So at even the capital structuring stages and the ROC related forms, these compliances are not up to the mark. So these are the concern areas we see. What we would like to say is that we want companies to address these concerns even before filing the documents. At the time of filing the documents, whenever there are some certain pending compliances need to are there. So all those needs to be done and then you file the document. When it comes to us, we have taken a stand along with, and SEBI has also said, Ki, don't take a document wherein these concerns are there, so that, a level of compliance is already done at the company level. So that is one thing, that ROC compliances are there. Then we also see very frequently in the past 1 year, when before the document is filed, there is a change in the auditors. And sometimes in the past 1 year itself, 3 4 times the auditors change. So this we are not comfortable with. Whatever be the reasons, this should be avoided. And often we also see that the auditor is in better command of the financials of the company than the CFO or the promoters. So that should also not be the case. In fact, the promoter knows the business. He also knows what is the revenues and all that. So a command by the so that a confidence level on the promoter is built up on by this. Then again, one major concern is, most of the time when a company files a document, the objects of the issue is raising for a working capital. So when the object is working capital, what we generally see, the projections that are given, the calculations of the working capital that are given, is not in line with the past trends or past growth of the company. Suddenly the revenues they get orders, the revenues are inflated, the working capital requirement itself gets inflated. So these things are to be avoided. What happens is, the debtor levels, the debtor days are increased, the creditor days are reduced. So these type of issues we very commonly face. So the companies need to see that these issues don't prop in when you're filing the offer document. Then, then again, one more major thing what concern we see is, suppose there is a capex that for which the company is going into, when the object is for a capex, the vendors with whom the orders are being placed, they are such vendors, they may not be financially capable also to do this order, and also in sometimes we feel they are not in the area for which the orders are being placed. So there is a major concerns. We need the merchant bankers also to do a diligence on the vendors. And this is, see, basically just for writing it down and getting a clearance. It's not, that is not the thing that is to be observed. We have to do a proper disclosures, because the money what you're raising now is from the public. So you are more responsible. There's a huge lot of, and what I would say is, if it's a clean company, if the money, the objects and everything disclosure norms are there, and if the company grows their business after listing also, so the even the and the pricing, once they grow, the pricing also is maintained. The next level, next round of fundraising becomes very reachable and possible. So it's not that just you raise once and then you vanish away. So that's not the case. That is, earlier we used to have such companies, but that's not the attitude that we should be following this. Okay, so these are my smaller concerns, Pavanji, that I just would like to highlight. Yeah.
Okay.
Thank you.
Okay, thank you, madam. Thank you very much. But I, after the Harshad, I will ask Harshad and some few questions, because I know you have other meetings also, and Avishkar is called in the SEBI meeting, some urgent meeting. So Avishkar will join later, but I will ask some questions to you. So Harshad, you, from your stock exchange NSC side, what Radha madam has mentioned, what message you want to give to people, the promoter and the merchant banker, those who are filing documents, that how this thing can be very smooth. Over
Yeah.
to
Yeah. So thank you, Pavanji, for giving me this opportunity for expressing my views. So basically, what Radha ma'am has already touched upon with respect to the object of the issue, wherein there has to be more clarity given, because what we have seen generally is, suppose now companies financials are saying X, but they are raising fund which is more double or triple the X their numbers are with the past what they have already have been achieved. So the justification why they require so much of fund should be also be given. The clarity should be there with respect to if they're doing that working capital, which Radham already touched upon the basic concern, because all the SMEs issues, what we are finding, 90% of them are for working capital requirements. So when you are going for that, make sure that whatever the disclosures you are giving with respect to debtors, creditors, their cycles are clearly articulated, and the projections that you are giving are aligned with what the fundraising that you are doing. Because it should not be very exponential that you are saying, okay, right now my data was this much, but I am thinking that data would go so much X number of my creditors or that sort. And that's why I require a huge working capital requirement. And when you are using that also, so as a new amendment which kicks in, which also says that if you are giving a working capital requirement, then when you're filing a financial results, now you have to give a full detail where you're using them. Earlier they used to just give working capital X number and how they are utilized in the next quarter or whenever they are filing the financials post listing. Now here they are saying, okay, give the full numbers, like where your assets, where your liability has been used, and whatever the projections were there has been clearly articulated, and you're using that funds in a proper manner. Because that is what the concerns is with regulator also and with us also, because when you're raising the funds for working capital, post that it's very difficult to track whether it has gone in the same per or same thing where you have already raised that fund. So that is one thing which would be there. Then we face various challenge in terms of business, how the company writes in the offer document. Because being a small company, I understand, but when you are giving the business, because generally the people who are investing will go through your business of the company, that should be clearly articulated, it should be properly given, no futuristic statement should be mentioned. And you are sometimes they use leading, they use the word that we are number one, but it has to be substantially supported by the numbers. And in that case, because wherever we have seen that they have been using this kind of words very frequently in the business sections, when and it has to be very clearly given, a proper detailing has to be given in terms of what the company is into in a very layman language, so that the people can understand what exactly the business this company doing and what are the projections. Same way in terms of the capital structure, it has to be clearly articulated how the capital structure has been built in, what was the promoter holding, how it has been built in, because at times you have seen that it has been not been disclosed very clearly in the offer document how the capital built up is there. And if there are companies, then who is the ultimate beneficiary owner, that has to be clearly mentioned in the offer document. At times you've seen that it is not mentioned. Then in terms of risk factors, generally the risk factors are also not very uh, numerically arranged, because it has to be like which is the prominent risk factor has to be top 5 top 10, but they are not. The major risk factors go down, and the not the major risks are coming up. So that also we also try to look in how the risk factor has been disclosed in the report document, and we try to tell the companies kindly do a rearrangement. Because in SME IPO, exchange is the approving authority. It doesn't go to SEBI, it goes SEBI only for noting purpose. So when you're filing with us, definitely you should be also very mindful that the risk factors according to your business should be in a proper chronological orders, not as like the risk factor which is impacting the company is very at the 15, 16 and more than that also. It has to be properly arranged in a way that it would, if that will impact how it will impact a company at a larger extent. Then in terms of litigations also, the litigations needs to be clearly articulated, should be given properly, disclosure has to be given in litigation section. They are not the one liner, because we have seen many times there are only one liner. The litigation is pending here, litigation is pending in the high court, supreme court, or wherever. You have to give a proper justification why it is pending and what is it pending. If it gets articulated, then what impact it will have on a company. Because sometimes it might be a cases that the case is pending, but we don't know what amount tune would have an impact on the company. But at least you should mention that if this would be there, then what could be the impact on that. Because there are so many things that you put in the offer document, but it has to be clearly articulated what exactly you are going to say, and it has to be very clear in terms of giving the clarity to the investor at large and an exchange. Because when we are going through the offer document, we came across so many things that so many litigations are not there, because generally litigations can be done through author investors, through other channels, where you can also go and search, okay, are there anything pending against the company, promoter, or a director? But it has not been done so. Then when we ask questions, then they say, oh, this is miss out, the management has not told us. So when the merchant banker are also processing, we tell them, okay, please do this search, because that will also have a major impact while you are disclosing in an offer document. Otherwise, again, you need to do, when exchange asks them, most of we have seen that you have asked them to do a refiling also, because of the lack in the disclosures that has been given in the offer document. So these were some of the points that I want to highlight from the NSE side,
O-
the way the market is moving and the disclosure regime. We are in the disclosure regime, so the proper disclosure, how much you put, will have a greater thing in the to clear and to get the approval faster.
Okay. Radha madam and Harshad, I have some few points
Yeah.
like when you are bringing out SME IPO
Hmm.
for working capital for various purpose.
Yeah.
So the first point is, what does the stock exchange expect from a company when it plans to raise fund for working capital? And what level of checking or due diligence is expected from the merchant banker for this purpose? Harshad, first you, then madam.
Yeah. So basically, when we are looking into the working capital, so we try to see at the trend how the working capital was giving in last 2 years, 3 years. How was the trend? What was their data creditor cycles? And now suddenly, if they are saying, okay, there has been substantial increase or decrease, and that's why we require a working capital. So we could require a proper justification to that. What exactly has been changed in that? Is there any policy change which has happened, and how that has been happened, and who are the debtors and who are the creditors, why this has change been happen, and whether that number supports what the fundraising that we are going to do it. But it should not be a very exponentially say that x time now my number has been increased, because every time there is be trend, right? We know that if you have market right now, what the market situation is, no debtor will say, okay, no, I will not pay at time, and no creditor will say, okay, no, give me first. So it has to be a properly in a reasonable form, and the numbers should be not so much exponential that it raises a concern on the exchange while we are processing the application.
Okay. Madam, Radha madam, the same question, that when somebody is raising fund for working capital, what due diligence you do?
I would just what Harshad says is totally correct. I would just like to add one more point. Generally, what happens is, how do you make a projections? You make a projection based on your order book, right? कि the company will say कि next year के लिए मेरा इतना order book है, मैं इतना काम करने वाला हूँ करके. I hope I can speak in Hindi in
Yeah,
between.
yeah, yeah, yeah.
Yeah, yeah. So what we need the merchant banker is to just go through their order books and check whether these are the same companies wherein they have earlier also gotten order, or कुछ नए नाम आए तो how is that process, मतलब how is it that the company is able to get through the new names? It's just that these names are genuine or not, so diligence to that level also needs to be done, I would like to add.
Okay. Okay. My another question is relating to this same thing. Like when, besides getting quotation for capital expenses, when we are bringing out issue for capital expenses, what other supporting document does the stock exchange expect the company to provide?
So generally we don't go and see, because that's a due diligence what merchant banker has to do. But generally we see that if you are going for a capex, then if you are taking some sanction from the banks, where the banks have given some sanction, that also we can try to look into it. But generally we see that whether you have done some purchase order, whether you have, if you are going to buy some machinery, whether you have placed some order, if you are going to buy some land on that, whether some dealing has been done, or what exactly your progress is on that front. Which should not happen that you will say, okay, if once the funds are in place, then I will do x 1 2 3 4 5 6. Then
Okay.
that doesn't make any sense. Basically you should be a pre-plan that what exactly you have done, and then you are going, and then you have sense of like, yes, I want 100 crore. See, unless and until you have not done any study, if you're not gone to a vendor, if you're not gone to a land parcel, if you're not gone for a machinery quotation, and then just saying the numbers, I want 100 crore, doesn't make sense. So you should have a supporting performers or whatever the documents that you are there, or if you are taking a bank loan, then where the bank have sanctioned something on that sort of, that generally we ask if we found out that there is some fish in that, because generally we don't take any supporting documents. But yes, if we found out that the proper disclosure not to the tune to that effect, then we call for those documents.
Okay. Madam, this is the same question on capital expenses. It is necessary to take multiple quotation even if the company wants to purchase the item from a specific vendor and the vendors is quoting a higher price. So what stock exchange see in this?
So sorry, the vendor is quoting a higher price.
Yeah.
Okay. So see, a vendor can quote a higher price because his goods may be of a better quality. So it's not that they have to go with the lowest. They have to justify why they have chosen this vendor. Also, I would like to add one point where Harshad says is when what we expect is suppose say there is a capex of 25 crores that I am placing an order to a certain vendor. What we have started doing is we have started doing the vendor diligence also. We also sometimes wherever we find it's a doubtful thing, we call for the financial statements of the vendor. And it has also been observed that presently I am giving the vendor an order of 25 crores. But past 3 years में कभी उन्होंने दो उनका रेवेन्यू कभी 2 और 5 करोड़ के ऊपर गया ही नहीं है. तो आप इतना बड़ा ऑर्डर देने के लिए what has you seen that it they should have the financial capability and the bandwidth to complete the order, right? So this is also one more thing that we need the merchant bankers to look into.
Okay. Okay. Harshad, another question is, can quotation be taken from the vendor who are not registered with under GST or have just started their business? It is compulsory for vendor to have some minimum experience in the business.
Yeah, so generally they should have a minimum, because see, because again there would be a litigation if there is no GST taken, and there are so many litigations which are happening around in GST term also. So generally we look into that. If yes, if it is not there, then generally we ask why it is not there. And it should not happen that you're giving, like Radham said, you're giving the order, but whether that person is capable of delivering that, that should also be looked into mindful, because it should not happen that we are just giving a vendor for a namesake, just to show that I am having a order, I am having a performer, but that vendor is not capable of doing that kind of output which I require.
Okay, okay. Madam, can land acquisition by company from one of the member of the promoter and promoter group of the uh, and this is the object of the object of the under the IPO. What you see and what you react on
सर
this?
पैसा प्रमोटर के घर पे आ रहा है ना.
हाँ,
So वो नहीं हो सकता अभी.
okay, okay,
Yes, yes,
okay. So IPO for the purpose of promoters getting money from this route is not allowed. Okay.
yes, is not allowed.
Okay, if company wants to buy a building or plant machinery but shows them as a separate objects and not under the head of project, in what situation does the exchange expect these to be shown under the project category?
नहीं, but what is the building and plant and machinery building for use for to set up a project या building लेके क्या करने वाले हैं वो लोग.
Okay,
हाँ. So if it is for the setting up of a plant and machinery तो वो project में ही आएगा.
okay,
Otherwise let us know कि उसमें क्या करने वाला है. It will depend upon case to case. What is the
It
description
should not
given
happen
there?
that सिर्फ staff के लिए है and it's a corporate office, they are just buying it,
Yeah.
they are doing nothing.
okay. If they are doing without projects something else, in no office, nothing else, just they want to buy the building, is it allowed?
क्यों चाहिए सर? क्या
Okay,
Because you
justification?
are raising a funds from the market,
Yes,
right?
from public.
Just
Yeah.
yeah, just public and not doing anything, no revenue. So what outcome you are going to pass on to the investor at large?
Yeah.
Who is that?
okay, got a point. So now I will request both of you because now we will start the other part of the presentation, and when Mr. Avishkar will join, we'll take his view also. I request, Madam, whatever time is allowed, because I know you have some meetings.
Yes, sir.
So you can go and you can come back, whatever it is, or you can keep it. So thank you very much,
Thank
Madam.
Thank you for this opportunity, Vijayji.
Arshad,
Thank you.
I hope
Yeah,
you will continue. Okay.
yeah.
So, friends, now we are giving a presentation, a complete webinar on from eligibility to execution. So first, I am covering a step-by-step roadmap for raise fund by SME IPO. Can you just open the presentation, please? Okay, so this presentation is divided into 4 parts. The first session, the context, number one, and number two, options. What are the options available? Number three, readiness, and number four, execution. Context and option I am covering. Readiness, Manoj will cover, and execution, Ruchika will cover. And then valuation, other part will be the part of this readiness and execution part. So friends, the first important thing is that we have to understand purpose of fundraising in driving growth and long-term business value, emphasize need to align fund goal with our company's strategy in the market environment. So you have to see why you want to this fund, what are your object, how you want to put this, and what are the market dynamics are going on. Next. So this context I'm covering. Just next. Yeah, next. So first is understand why company raise fund. So the object is expansion, working capital, M&A, and capex. Now, how this objective of expansion help support growth? So when you raise capital, because when expansion you require enter into new market, you want to scale up the operation to capture demand. That is the expansion need. Sometimes working capital you need because you maintain a smooth operation and financial stability. You have more orders and you have to continuously fulfill these orders. You require working capital because cycle of payment and payment to the vendors who supplying raw material and the seller company is there's a gap. So you require working capital. Sometimes orders you have more order but you have no fund. That's a problem. Sometimes you require for M&A and inorganic growth, like you want to escalate market share or you want to reach customer. Suppose you are in Delhi and you have to have some company in Tamil Nadu, you want to buy to capture this market. That is another aspects you require. Capex and infrastructure, that is another thing because sometimes you build capacity for future demand because you have a small business, but tomorrow it's become, you want to think that future business growth will go. And then sometime you go for operational efficiency, like converting the machinery on the basis of the smart machinery, where you have automatic system to increase the capacity of business. So friends, fundraising is a strategic tool to fuel growth, initiative, and will enhance long-term business value. That is one important aspect. Now, the second question is, why when this is one next Shivam, the why enter external capital is essential. So when you are going for SME IPO or IPO market, it is external money. So the question is why you require this. So first you have to understand challenge with internal funding. First problem is speed of to market. Like when you get external fund, you escalate opportunity capture because you have some fund that is a limitation, but you are getting additional fund, you can escalate your speed. Second is risk concentration. If you are putting entire money and you are not taking outside money, then tomorrow is any problem, you will be doomed in this. So that's why you require an entire burden on the company will also reduce because you are just internally creating value and then investing. That has a limitation. Next is strategic expertise and network. So when investor is coming, whether it's a venture capital, P investor or market investor, they require they bring some valuable guidance and credibility. That is another aspect. And when you are going for IPO, you have to give and you have to showcase. That's why you have to change your strategy. Now, debt avoidance, that is another aspect. Every time you are taking loan, paying interest, that is also not a perfect combination. You should have a combined thing. So equity reduce debt dependence on borrowing and preserve financial stability. That is another aspect because debt start from day one is a cost. Then valuation enhancement. You just understand, if you are putting your own money, there are so many business, this is a family business, they are doing, but they are not growing in this manner, the way other people with putting 10%, 20% equity stake and they are flourishing, because external funding always unlock higher company valuation, interest of the people, and they invest in this. It is not a deadlock. It is a single thing which can enhance. So external capital is vital to unlock faster, scalable, and less risky growth uh, pathway. Now, these are the, I have told you the why they require and why external fund. Now, options. What are the options we have? So we have to see, first option is IPO. The next option is private equity, venture capital, angel funding, debt financing. Now come to the IPO. The IPO, we have to see criteria. What are the criteria? Uh, Stage of the company, at which stage you can bring out, capital raise, ownership dilution, governance and control, visibility and credibility, liquidity for investor, and timeline for funding. Now, these are all things which are there for IPO funding. These are the category. And this IPO helped raise business scale capital from public without giving up control. It also boosts brand credibility, because I just told you in the beginning, if you are bringing IPO, you can invest any number of amount for your business growth, for advertisement, but you get automatically branding of the company by this process. So investor is also known and liquidity also improved. Next. Now come to the private equity. So same, all criteria are there. I'm not giving in detail. I will share with this presentation to all of you. So private equity is as own limitation, because it is growth or mature. They want timeline for funding 3 to 9 months. They take exit. They want to do in 3 years to 7 years, and they are very selective, very choosy, and they're very demanding. Venture capital is early to growth. That is another aspect. Moderate to large company is coming into this. Board involvement is also there, and uh, exit by acquisition or IPO, and time of funding is 2 to 6 months they take. Angel investment is also another aspect. And next is debt, which is a always readily available to everyone. So now I'll just cover two things. One is the IPO versus P, and IPO versus debt. Next slide. So you see comparative lens. IPO, what are the advantages? You have access on large fund, brand visibility, liquidity to shareholder, valuation, transparency, governance, scalability, exit route for the existing investor, long-term cost efficiency, promoter control retention. It is not 100%. Now, if you compare in the debt finance, you will not find all these things. You find only long-term cost efficiency, and remote control is always with you. Private equity, you are not getting a liquidity. A long-term cost efficiency is not there because they demand more money. Promoter control is also not there. In venture capital, brand visibility is there or not there. There's two things. Liquidity you are not getting. Valuation valuation and transparency. That is because venture capital is investing in the few fund, and the long term, and the promoters control is also somehow is going. Angel investor, so many things are missing in this. Next. So friends, first I just, always there is a question that IPO versus the capital, how the IPO debt financing. So debt financing, you will get only two positive things: long-term cost efficiency, because IPO is also giving and this is also giving, but this is for long term. So always you are earning money and you are paying debt, you have to pay a limited amount. Your control is always there. But some economists say debt is costlier than equity. And this debate is always going on. And people say, but in my opinion, for IPO, for SME market, for the people who are investing in this market, or the promoter of the SME, if they want to raise fund, then it is always advisable. Because we always hear the cost of equity is higher than debt, but have we ever asked higher for whom? Higher in what sense? That is another question. Because always when we are discussing with the promoter bring out this question. So I just want to remove this doubt. Now, cost of equity is a notional and market-driven return. So that's why you say that P fund asking more fund, but he's asking the when you exit from the market, so he will take it from the market. So not is on your cost or on the company. That is a real cash outflow, a fixed EMI you have to pay every month. In the early stage, every rupee counts. Cash retention is king. That is very, very important. Practical dilemma is always there. That reduces your working capital, forces you to focus on EMI, not growth. Because if you have taken a 10 crore loan and you have to pay interest of 10%, it means every time you have to pay EMI and you are focusing on this, and your growth will also not start, it will be slow. Equity lets you breathe, reinvest, and focus on product, people, and performance. Then future vision. Equity comes without a guarantee, without repayment stress. If you succeed, market will reward you. If you fail, equity is a patient. It can wait for you. And finally, I will just say equity is not expensive. It is a freedom capital. Debt is not cheap. It is a pressure capital. The concept, the finance say equity is costlier than debt. Reality, equity is not a burden, debt is. Founder need freedom, not EMI pressure. That is another summary of this. Equity versus economic enabler, no interest, no monthly drain. Market-driven return, not company paid, because market paid. Encourage growth, not stress. Startup and now the question is for whom this question of debt and equity. For startup MSME, prefer equity. Cash preservation and high risk tolerance is always good. Mature cash generating firm, use debt because lower tax shield and cost is also reduced, and you are no dilution risk also. Over leveraged business, avoid both until you are stabilized. So friends, this is a one concept which is always there. So I will just say we must stop asking what is the cost of capital. We must start asking what is the cost of not surviving in this light. Equity capital, especially through platform like SME IPO, is the greatest enabler for Indian entrepreneur revolution. So this debate is always there, and this debate I just want to finish crack, and I have just understand this. Next, Shivam, next. Now, if you see fundraise, IPO, and other thing, in SME 2,371 crore, 6,124 crore, then 9,962 crore, and till now 1,089 crore money has raised in the stock exchange. In main board also 34,000 crore, 67,000 crore, 1,82,000 and 11,000. So you just see this growth is going continuously on the same parameter on the way it is happening. So this particular thing will grow and will take. Now, it is not that only IPO, but P and VC fund is also getting enhancement and traction. So in India, P and VC investment in India is 69 billion in 21, then 61 billion in 39 and 42. Now just see this dependency is reducing and the dependency on IPO market is growing. Next. And if you see the number of the companies which are shown next, number of companies which are there in 2012, it has started 3 companies in NSE and 12 company in BSC. And then slowly you just see 212, 240. Okay. So initially NSE emerged was far behind than BSC, and slowly they have picked up, and today NSE emerge is coming out, and now this time both are competing to each other. So you can see in last year 181 and 69 issue came. This year 43 and 41 issues has come. And interestingly, the SME law has also given that after a particular threshold, you can migrate to the main board. So without going for the detailed IPO market, you can through SME route you can do. And in an NSC emerge, there are 629 companies listed. Out of this, 145 had migrated to main board. BSE SME, there are 578 SME IPO, out of which 195 have migrated to main board. So this shows that many SME are not only using IPO platform to raise capital, but also growing strong enough to shift main board over time. So it reflects how SME IPO are serving the launchpad for ambitious business, offering funding, visibility, and stepping stone full-scale public money. That is the future which is taking place. At last, I will just mention, next slide, assessing IPO readiness. You must, when is the right time to go public, you should have healthy business you must have. Without healthy business, you can't do this. You should have demonstrate consistent revenue, strong fundamental. You are fulfilling the eligibility criteria, which is required by the regulator, stock exchange, and then financial threshold. Then you have a growth trajectory. It is not that just you are bringing out issue, but it's a growth also, giving promising return to investor. That is another aspect which you have to do. So this is initial point which I have covered, and now I will request Manoj to cover the readiness. So over to you, Manoj, for readiness.
Thank you, sir. Thank you, Radha ma'am and Harshad, for giving their perspective. I think it is very important for all of us as investment bankers, as well as the corporates who are planning for raising the fund through SME market. So as we all know that everyone is saying that SME is very important for Indian economy. So that is the fact. And it is a very big size of market which is to be tapped by the SME market, SME listing. And slowly, as Pawan sir was showing in his presentation, that the companies are now coming in number to this market and raising fund. So considering these facts is one part, but we have to understand what is the right time, what is the right size, and what is the right way to raise fund through capital market for SMEs, because SMEs are small. They need a lot of hand-holding, lot of preparations to change, because the listing is not just an event, as sir was saying in the beginning. It is not just a single event. It is a full transition of the company, its structure, its governance process. So right time, right size is very important. So let me share my presentation and discuss further. Just a minute.
It's not visible, Manoj. Manoj is not visible. उसका किसके बाद presentation है?
Sir, Manoj sir has it.
Hello, am I visible?
No, Manoj, not visible.
Presentation is not visible, sir.
Presentation not yet visible.
No, sir.
Just a minute. Is it visible now?
Yeah.
Yeah. So let me start with the discussion. So we have to understand what is the SME IPO and what is the basic parameters on which the company can be listed on stock exchanges. So SME are any company which has a substantial size of operations and a profitability trajectory can go list for listing. The statutory threshold is very much simple, that any company with a paid up capital which is not more than 25 crore can be listed on NSE or BSE emerge, which is a special platform given for the SME. However, we have to see the right size of the operation, right profitability, and growth trajectory to choose that this is the right platform. Otherwise, it will not be a successful venture to go for IPO for any SME. So, besides the statutory limitations, we have to see what is their growth. So, if the company is continuously growing and it need capital for further growth, it is the right thing to go and explore the SME market. Uh, as soon as the company is listed on any board, they need a lot of changes in their structure, their governance processes. However, considering the fact that SMEs are small, SEBI has prescribed a lesser compliance burden for them. They have also shifted the process to the stock exchanges, and they are clearing the offer document. So it is a fast listing process. The cost of listing is also much lower than any main board listing. So considering all these facts, the SME platform is very lucrative for small companies to go for listing. What is the right purpose for which the company should go for listing? I think Radha ma'am and Harshad has clearly said that what they look for when they vet the offer document and what they expect from the merchant bankers. So mainly the purpose of IPO should be the growth capital. It should be for the growth of the company. But besides that, it obviously for the purpose of growth, there can be different things like capex, capital expenditure is required, working capital to cater to serve the expansion of the company uh, can be attached object, and all those objects are allowed. However, proper scrutiny, proper purpose documentation is very much important. As soon as the company go for listing, it has a lot of benefits, like it creates brand visibility, the governance structure get rationalized, the transparency and disclosure becomes much better than any unlisted company. So it gives credibility to not only the company and its regulators, but also to the persons who are dealing with that company, maybe customers, suppliers, the bankers who have already funded the company or who are going to fund the company for their growth. In fact, other than that, even the employees feel that they are working for a company which is listed, which is well governed. So it changes the dynamic of the company a lot, and hence it becomes a launch pad for further growth. As soon as you are a listed company, you can continue to explore further growth opportunities. Sometimes it may be swap of share, you can acquire another company, you go for inorganic growth, and hence it becomes a launch pad for further growth. And then you have the opportunity to go to the main board after 3 years, as per if you are complying with the conditions of the growth. Then so it becomes a very easy target for the company for further growth opportunities. So if we list out what are the benefits available to the company if they go for listing on SME board, it clearly unlock the value because the shares are listed and traded. Their value is available in the market. Everybody knows what is the market capitalization of the company. It gives liquidity to the company and its shareholders. Obviously, any shareholder, if they need fund, they can sell their shares in the market. So liquidity comes through listing. Then further access to the capital is always easy. There are various venues which are available to a listed company, like raising capital through QIB placement, private placement. You can access to the large pool of investors like alternate investment funds, QI banks, and other institutions who are investing in the shares of a company. So a lot more access to the capital is available for a listed company. In a future further growth, if you are growing and you go to the main board, you may also seek institutional participation in your fundraising activity. Then brand and credibility enhances substantially because you are much better governed, you are more transparent, you are giving your financial disclosure every half year when you are on the stock exchange, SME exchange, and as soon as you migrate to the main board, you give quarterly basis your financials. So it gives a lot of transparency and credibility to your brand, to your strength, financial strength. Then for smaller investors or even for the investors who have backed you at the time, earlier time, it gives exit opportunity. They have liquidity, they can exit as soon as they as and when they want their fund to be unlocked. And then your dependency on the bank finance or loans reduces because you have another source of funding. You can raise further capital, you can issue further capital, equity, and raise fund from the market. So dependency on the debt reduces. The balance sheet strength is also improved as soon. So a lot of benefit is available to the company through this listing process. And it is just a start of the journey. It will continue over a period of time if you are successfully growing. Uh, we have to also see if a promoter take a decision to go for IPO rather than raising fund through bank loan or for raising fund through private sources like private equity or venture capital fund. So as soon as a company is listed, the promoters or the key shareholders also get a lot of benefits, like their value is unlocked. They know that what is the worth of their shares in the company. They get liquidity whenever they need fund. They can sell their shares, or they can place their shares to raise a loan. So that flexibility would be available. They get access obviously from the for the capital. Their personal growth happens. Their brand capability credibility enhances. So that those benefits are always available to even the promoters, and uh, they are also not less dependent on the banking finance. They have not the burden of paying every month EMIs, like sir was talking. Many of the persons are very much afraid of taking a lot of leverage because in case of closely held company, obviously banks generally take the promoters personal guarantee or personal assets as security, which may not be required when the company is a listed company. Now comes to the what is the parameters for a valuation in a company which is going for a listed. So there are two major factors. Everyone knows that certain internal factors are there which determine the value of a company, and there are certain external factors. So we have to balance both kind of factors, and based on that determine what is the right value at which the company can raise fund. So one and most important is the financial performance. The company, if the company is growing fast, its revenue growth is good, it is a profitable venture, and its margin is driving, then the investor would have a lot of confidence over the company. Then the business model is also very much important. It should be scalable. It is not a one time or such business which cannot grow very fast because it let's say there are certain sunset industries and you are in that industry, then there will not be substantial growth expectation from the investors. So it will be difficult to raise fund or difficult to get good value in your company. However, if your business is scalable, there like in tech enabled business, or maybe new age business, or renewable energy related business which has a lot of push from the tailwind from the market or the government regulators, then you will get much better valuation. Then you have to showcase your USPs. What are the main point which makes you better than other industry peers? So what are the competitive advantage you have, and how you are pricing your product better than the industry or market? That would help you to unlock your value, get better valuation in the market. Then what are the business future expansion plans? Clear roadmap should be there. Growth plan, purpose of raising funds should be growth. And if the growth plan is very much clear, and there is a potential of growth of your company, of your industry, then you will get much better valuation in the market. Then comes the one of the most critical aspect which we look for, that is the promoter or the founders of the company. So who are those persons? What is their intent? What is their past track record? How clean their image is? How dedicated they are towards the business? So there should not be internal conflict. The promoter should be clearly devoted towards the business, and their skin in the game should be full. That is very, very important, and they should have the leadership capability. They should be they have the capacity, they have steered the company over a period of time and taken to such a growth path. That is very, very important key factors, and that gives the confidence to the investors, because SMEs are very small. They cannot be considered to be a professionally managed, to have a large number of professionals, qualified professionals running the show. It will be obviously, in most of the cases, the promoters who would be driving the business. So their capability, their strength would be very, very important. Similarly, we have to obviously, at the time of valuation, we have to see the external factors like current economic scenario, industry, whether it is growing or whether there are certain hurdle in this industry's growth. Then brand visibility, competition with the peers. All those factors would determine what value you can expect when you are coming out with the IPO, and based on that, you have to raise the fund. So right advice would be there. Then we have had a lot of discussion relating to what should be the object and what is the right object for which IPO can come. So IPO can be for any of the object, and there are certain restrictions and certain expectation of the regulator as well as to look at the time of issue of shares. So it can be for capex. So you can buy assets like land, building, plant, machinery through the proceeds of the IPO. You can repay the loan. If you have over leveraged company, you can reduce the debt burden, and that can be one of the object. If you have some certain you want inorganic growth and you have identified acquisition, you can do that. And to fuel the growth, obviously working capital may be required. So working capital, if it is commensurate with the growth of your business, growth plan of your business, or capex of the company which you are putting, then working capital can be one of the object of the raising the fund. So whenever you are, I think what checks and balances regulators have, I think Radha ma'am and Harshad has clearly said, whenever you are saying you want to purchase something, you want to make investment for land building, plants, machinery, you have firm plan. You should have firm plan. You should have quotations, project report, proper planning for the expansion. It should not be a vague plan. If you have object of repaying of loan, it is much simpler, but we have to see whether it is logical to repay the loan or put the money for the growth of the company. If you have identified acquisition and the valuation and other parameters are already justified, it can be very much in your capacity to do. If you are raising fund for working capital, then obviously a lot of scrutiny would happen with respect to how you have calculated the working capital gap. It should not be extraordinary from the past track record. If you are, let's say, what is the debtor cycle, what is the creditor cycle in past, what is the stock level you have kept in past, and what you are projecting to determine the working capital gap is very, very important. If you are doing capex, if you are adding new plant, new capacity, certainly you will need additional working capital to leverage that new capacity. And for that working capital, if it is commensurate with the existing track record, then it is reasonable expectation. There has been a certain changes in the limits for the general corporate purpose. So general corporate purpose is the basically fund which you are not identifying for any specific purpose. So earlier it was up to 25% of the net proceeds you can keep for general corporate purpose, but SEBI has restricted that to 15% of the issue size or 10 crore, whichever is lower. So now unidentified fund utilization cannot be more than 15% or 10 crore, whichever is the lower. So that is logical restriction, because whenever you are raising fund from the public, you become a trustee of the public fund, and you should be very much careful while using, and hence it cannot be unidentified utilization so that you can misuse those funds. So that is very, very important. Uh, let's say, so simple, one example I have just showing is, let's say 100 crore is total fundraise, and out of which 25 crore is offer for sale. That means you are doing your own shares, or existing investors are exiting from the company. So that part is offer for sale, which can be kept aside. So let's say the fresh issue is 25 crore or 75 crores out of 100 crore. Uh, Out of that gross proceeds of 75 crore, issue expenses are reduced, so net proceed becomes 70, and that proceeds can be utilized for the purpose of all the objects as we have discussed earlier. Here the restriction of general corporate purpose would be 15% of 70, or 10 crore. So 10 crore is the basically limit for you can keep for general corporate purpose. Then one important aspect is promoters' contribution. The concept of promoters' contribution is important because in SME IPO, it is assumed that the promoter are the growth drivers. So if there is a promoter, his skin should be in the game, and hence the promoter should hold at least 20% of the post-issue paid-up capital of the company. That is the legal requirement, and that condition should be satisfied at least one day before the opening of the issue. And this promoter's contribution, there are certain shares which are not eligible to be considered for promoter's contribution. So at the time of planning, we have to keep in mind all those securities which are ineligible and should not be counted towards the promoter's contribution. Another important part is, as the object of promoter's contribution is to keep the promoter there in the company for a longer duration. Hence, the minimum promoter's contribution, which is 20% of the expanded capital, is kept in lock-in for 3 years from the commencement of the IPO or commencement of the production, in case it is for the new project for which IPO has come. If the promoter's holding is more than 20% of the expanded capital, then that share would be lock-in free in two tranches now. 50% of the excess of 20% would be free after 2 years, and the remaining and 50% would be free after 1 year from the date of listing of the shares. So any person other than the promoters who are holding share in the company which are getting listed, their share would also go for lock-in for a period of 1 year from the date of listing under IPO, allotment under the listing IPO. There are certain exceptions like employee stock options. If shares are allotted to employees, that would not be in lock-in. The equity share held by the employee stock option trusts are also free from the lock-in requirement. And the VC fund or AIF category 1 or AIF category 2 or foreign venture capital funds which have put shares, put investment in the company at least 1 year before the date of IPO, would also get free of lock-in shares. Then there are, if we are planning for IPO, if we're going for IPO, SME IPO, there are various chapters in the offer document which are made for the public to understand about the company and its business. So certain chapters are very important, like the business chapter. So that chapter is very, very important. So business chapter gives the overview about the company, and as Harshad was telling, we have to give all factual information only. We cannot give jargons like we are the best or largest or first of our kind, or etc. Whatever we are saying, it should be factual, it should be correct, and give exact information to the investors to understand about the business of the company. So primary business, what is the core business activity? Where is the manufacturing facility? What is the size of the manufacturing facility? What technology you are using? If there is any collaboration or support from outside, or some brand collaboration, external technology transfer. So those things need to be disclosed in proper manner. Then the product and service being offered should be clearly mentioned. Then marketing approaches, what method you are approaching, whether you are doing B2B, B2C marketing, or what channel of sale you are using, what all intellectual properties you have. Those things need to be clearly mentioned. The property on which factory is there or business is running, whether it is owned by you or not, all those factual information should be correctly given. If incorrect or inadequate information is given, then it may be considered to be misleading to the investors and can have a very serious consequences. Incomplete business disclosure means not giving information completely or giving information which is not correct. In both the cases, it reduces the trust of the investors, and obviously it is against the norm for coming to the public. There are certain common pitfalls which must be avoided, like generic or vague business description should not be given. Omission of segment wise or geographical disclosure should not be there. Then failure to highlight the risks of or dependency on certain customer, supplier, technology, etc. should be clearly mentioned. It should not be avoided. Then promotional language should be totally avoided. Then another, I think, important is business related. Other important part is we have to highlight the risk. What are the internal risk and what are the external risk relating to the business? And because investors are taking decision to invest in the company considering those facts, so it should be clearly mentioned. In case you are not disclosing it, obviously actions can be taken with IPO can be withhold, or even if the IPO is cleared, action can be taken by the regulator against the company and the merchant banker for that. Then, and the last important part is right team to make the IPO successful. So most important functionary or the agency which deals in IPO is the merchant banker. So SEBI registered category merchant banker is to be hired. He will guide he will be the eyes and eyes for the on behalf of the regulator. He will take care of not only you but the investors also. Hence, a lot of responsibility is given by the regulator on the merchant banker, and he will be the right person to guide on all aspects during the whole journey. Then there will be legal advisors who will do the diligence, who will help in right drafting of the offer document, give you the right suggestions whenever the legal questions come. Then financial advisor, obviously the is important, who help in the valuation or determination or right price at which issue should come. Then one of the most important part is the accountant, that is the auditor of the company. So as Harshad was also telling, I think they don't like accountant to get replaced every time or very frequently. Auditors are the persons who are independent and who look into the financials in more deeper manner and in continuous basis. So there should be a peer reviewed good quality auditor who can do the audit of the company and restated financial which are going in the offer document. Then there will be obviously other agencies like investor relation of specialists who will do marketing, help in marketing, giving the right messaging, considering the guidelines given by the SEBI. So besides that, the registrar of the company and other advisors would be there. So these are the broader things I think I have given. Now how the IPO journey would be executed, I think my colleague Ruchika would take you through that. Thank you very much.
Ruchika, my request is we will share this presentation to everyone. So you just tell the highlighted thing you must tell.
Sure, sir. Just a second, I'm just sharing my presentation. Sir, is my screen visible?
No.
No.
I think. Just a second. Manoj sir, can you share my presentation? I'll just share it with you because I think I have some access issue here.
Yeah.
Just a second, sir.
Manoj, it's not visible.
Not yet, sir. Just just she is forwarding to me and I'll be sharing it.
I sent you over email.
Okay. Not received yet. You start speaking, I'll just.
Yeah. So I'll just thank you, sir, for providing me this opportunity. I'll take all the participants through the execution elements which needs to be taken care before you plan for SME IPO or before you start planning for the SME IPO. So the things I would be covering in my presentation would be eligibility norms, the contents that are part of DRHP, key disclosures that need to be made in the DRHP, and then further the roadmap for the DRHP. So starting with the eligibility, sir would be sharing the presentation shortly, but I'll start with the eligibility conditions. So SEBI ICDR regulation, chapter 9 of SEBI ICDR regulation provide the eligibility criteria, wherein the criteria, yes sir, the third slide, it is visible now. Yes. So the criteria are if the issuer company, promoter group, directors, or selling shareholder in case of OFS are debarred from accessing the capital market, then they cannot come out with an SME IPO. If the promoter or director is a promoter or director in any company which is debarred from accessing the capital market, then again that particular company, that particular issuer cannot come out with an SME IPO. If issuer or any of its director or promoter are in the list of willful defaulter or fraudulent borrower, then again the issue cannot come. And if the promoters and director are in the list of fugitive economic offender. So these are the broad guidelines which are provided in SEBI ICDR regulations. Thereafter, the ICDR regulation lays down that whatever eligibility norms has been provided by exchanges for the listing at their platforms, those also needs to be complied with to get the shares listed at any of the exchange. So in NSE, the post-issued paid-up share capital, and it is similar for BSE also, the post-issued paid-up share capital should not be more than 25 CR. The track record of the company which is planning to get its shares listed on exchange should be of 3 years. In this, the track record of the issuer company, the track record of the promoter, promoting companies can also be considered. In case of proprietorship firm which has been converted into company, then I think the track record of 1 full year as company should be there. This is a recent amendment. And the past track record of that proprietorship firm or partnership firm can be considered. Operating profit of 1 crore for at least 2 out of 3 financial year is essential. Operating profit means EBITDA. This is there in both the exchanges. Then net worth should be positive. Another criteria is free cash flow from equity. This is a specific condition in NSE only, not in BSE. That should also be complied with. Thereafter, similar conditions are there in BSE, paid up share capital, track record of 3 years, operating profit. Additional condition is net worth of having 1 crore in last 2 preceding full financial year, and net tangible asset of 3 crore in last preceding full financial year, and leverage ratio should not be more than 3:1. Another condition in BSE which is not there in NSE is with respect to change of name. If there is any change of name in last 1 full financial year, then the revenue from the new activity which is there from the new name should be more than 50% of the total revenue. So these are the broad conditions that needs to be complied with. In addition to it, there are certain OFS conditions which says that if there is a OFS in the issue, then the selling shareholder should not the OFS should not be 20% of the total issue size, and the selling shareholder should not be selling more than 50% of its existing holding in the issuer company. Now coming to the major contents or major index of the DRHP. So the DRHP is divided into 2 sections majorly. One is, maybe I would say, three section. One is business section, one is non-business section, and the other is financial section. So broad sections are general information, wherein definitions and abbreviations, notice to investor, forward-looking statement, summary of the entire offer document, offer related information that is provided. Then there is risk and regulatory disclosure, whereas risk factors, which has already been covered by Manoj sir in the previous slide, that what all the things that needs to be kept in mind while preparing the risk factor chapter. Regulatory and statutory disclosures, what all government and industry approvals are applicable over the company, whether they have been procured, whether they are in the process of expiry, what all things are there in accordance to that, that is provided. Specific outstanding litigation and material risk should also be provided in the risk and regulatory chapters. Then capital and issue related chapter needs to be prepared, where you have to show the entire buildup of the capital of the promoters, of the shareholders, top 10 shareholders, the price at which the shares have been acquired or allotted in past, types of issues. Then of course the object of issue, we have had a lot of discussions on it, so the object should be clearly provided, use of proceeds, basis of offer price. Now coming to the business and industry chapter, so where do you play and what exactly do you do? These are the crucial chapters. Industry chapters generally are based on the government reports which are available on the public domain. And in SME, it is important that those reports should be near to the date of the DRHP, not very older. And similar provisions are there in main board also. For business chapter, as Mr. Harshad has already mentioned, that it should be factual, it should be in a very layman language, it should cover all the pointers which are provided in Schedule 6 with respect to the capacity, the property, the area of business, exact, whether it is B2B, whether it is B2C, all those things should be there, trademarks and everything around it. Then corporate and management information chapter, which wherein the history and corporate structure should be covered, what all companies are there in the group, whether there are any subsidiaries, associates. And then another important chapter is who are the promoters, because any investor who wants to invest in a company, after knowing the business, they would like to know that who are the promoters, what is their background, since when they are into this business, what expertise do they have. So that is also a crucial chapter, and a lot of details with respect to their experience goes in there, because it builds the trust for the investors to invest into the company. Then comes the management chapter. Apart from the existing promoters who are on the board, there are independent directors, there are key managerial persons. Details of their experience needs to be provided in this chapter. Then compensation and interest of promoters, directors, KMP. Then there is a proper section of financial information, wherein you have to provide the restated financial statement for last 3 years or stub period if your DRHP is being filed within is filed post to the expiry of 6 months from the financial year information. Then there is a management discussion analysis chapter, wherein the financial figures, specifically the revenue, EBITDA, PAT, needs to be compared with the previous year financial information and the reasons for the changes around it. So that is also a very crucial chapter, because that exactly tells how the growth has been done in the past, historical period. Then comes the key financial ratio, auditor report, notes, and financial indebtedness. Another section is with respect to legal and other material information, where all the legal proceedings involving group and company needs to be provided. In case company has a lot of material contracts, documents, or joint venture agreements with any of the outside party, then those needs to be disclosed. There is certain section of offer procedure chapter, where the terms of issue, offer procedure, a restriction for foreign shareholders, and other details are provided. Outstanding litigation, again an important chapter, because it shows and it depicts the entire legal proceedings which are outstanding as on the date of DRHP against the company, promoters, directors, and the selling shareholders, if any. For outstanding litigation, as already mentioned by Harshad, that those should be clearly depicted, those should be in detail, should not be one-liner, and should mention about the financial implication that may arise in case they lose that particular litigation at a later stage. Now, I'm just covering 3-4 chapters which have what all things goes into them. One is history and first is history and corporate structure. So it should cover all the major events of the issuer since incorporation. So when you got your first license, when you achieved a milestone of turnover, you added a new manufacturing facility, you jumped into a new geographical location, all those things should come into it. Any material acquisition or disinvestment which has been done in past, any change in main objects since incorporation. Earlier you were doing one particular type of activity, you have added something in the journey of your company that needs to be disclosed. Details of holding company, subsidiary company, joint venture. Another chapter, capital structure, you have to provide the buildup of your authorized and paid up capital since beginning, along with the promoters buildup, how their shares have been built up, what type of issues, at what price, if not an allotment, then if transfer, then at what price, from whom. Then the security details of securities of ESOP if have been issued by the company. You also have to provide the details of securities issued at a price lower than the issue price during last 1 year. Shareholding pattern of the company, standard shareholding pattern. Also, in case you have public category shareholders, then top 10 shareholders needs to be disclosed in the capital structure and in the summary document. Then in the promoter and promoter group, the clear list of promoters first, and then the list of promoter group depending upon who are the promoters. In case of individuals, basic details of promoters, their educational qualification, past experiences needs to be provided. In case of body corporate, what business they are into, the history of that company, and the details of management of that particular body corporate is to be provided. If any company has been disassociated in last 3 years, then details of those company or names of those companies also to be provided in this chapter. Also, as mentioned, that details of UBO is also very crucial to be provided in this chapter. If there are any corporate promoters, that who is the ultimate beneficial owner of the company in case the promoter is a body corporate. Now comes to the management chapter. Basic details of board, KMPs and their qualification and their past experience should be provided. Details of shareholding, if any, remuneration paid to the directors in past, relationship amongst the directors with each other, interest of directors in the issuer company. That these are the crucial information that should form part. So after taking care of all the information and preparation of your draft of a document, alongside you should also prepare all the certificates that you should have from the company. You should have all the consents from the parties, and once everything is in place, then alongside you can also start preparing so now this is the roadmap, so you can also start preparing the draft investor presentation, because once you file the DRHP, then of course roadshows and marketing begins. So that is also a crucial document, and that should also be in alignment with the contents that are there in the DRHP. Of course, there are businesses there, numbers are there, auditors are there, but of course, to comply with the listing norms or to have the proper committees on board, you should have independent directors and a company secretary and a chief financial officer with adequate experience. So appointment of those persons is crucial. Then once they have been appointed, based upon their profile, finalization of DRHP happens. Once the DRHP is finalized, the board members and approve the DRHP, and then the DRHP is being filed with either NSE or BSE, depending upon the exchange the company has chosen. Next slide, sir. Now, after filing and before receipt of in principle approval, there goes a lot of queries and responses to it. Majorly, we have heard from the stock exchange's mouth on objects and on clarity of the business and risk factors specifically. So those happens, and then of course you receive the in principle approval. Post to that, you plan when you have to open the issue, and based upon that you file the red herring prospectus. Earlier was the draft red herring prospectus, now it is the red herring prospectus. And simultaneously you do the marketing of the issue, you do the road shows, and then you decide the particular date and launch the IPO and do the allocation, and then finally the shares of the company get listed on the exchanges. So this is the process to get listed on SME. Now, once you are listed, you are doing flawless business, you are being listed for at least 3 years, then there are conditions to migrate on NSE as well as BSE. As already mentioned by Pawan sir, out of 629 companies, 145 have been listed on NSE, migrated on main board of NSE, and on BSE main board, 195 companies have been migrated. So the criteria is to migrate to the main board. The paid up share capital should not be less than 10 crore. Market capitalization in case of NSE shall not be less than 100 crore. There is a specific formula to calculate it based upon the averaging of 3 months prior to the filing of application for migration. The revenue from operation should be greater than 100 crore in last financial year, should have a positive operating profit from operations for at least 2 out of 3 financial year. Similar condition is there for PAT also. Promoter and promoter group shall be holding at least 20% of the company at the time of making application. Further, as on the date of application for migration, the holding of promoter should not be less than 50% of the shares as were held at the time of listing on the SME board. Net worth criteria is of 75 CR. Latest net worth should be checked for this purpose. Listing period, as I already mentioned, is 3 years, and minimum public shareholders should be 500 to file an application. The criteria for BSE are slightly different. Paid up capital is same. Market capitalization in case of NSE was 100. Here it is 25. Promoter holding 20%. Similar criteria. Positive EBITDA, positive PAT. Net worth of at least 15 crore for 2 preceding full financial years. Listing period is again the same, 3 years. And public shareholders, there were 500. Now here it is 250. So these were the broad eligibility criteria, and then the roadmap, and then further how you can get migrated. Thank you, sir.
Thank you, Ruchika. I think sir is in a CB meeting. So now I would invite Sanchit to discuss about the valuation and how the pricing is determined. What is the basis to determine at what price, at what valuation a company can come out with the SME IPO. So over to Sanchit now. Thank you.
Thank you so much, sir. Good evening, everybody. I think it's a pleasure to be here today and discuss one of the very most critical and often misunderstood pillar for a successful SME IPO, which is the valuation. As you all know, in the SME IPO ecosystem in India, which is spearheaded by the platforms like SME Emerge and BSC SME, it has opened new frontiers for smaller and higher potential enterprises to access capital market. But there's a very key point. No matter how exciting the business is, valuation is always the lens through which investor views your company. If that lens is foggy or it is not clear, the IPO will underperform, no matter how good the company is, how great the growth is. However, if the valuation is very clear and credible, it becomes a very great magnet for raising capital. I think the first and the foremost point I would like to begin with is that why exactly valuation matters. Valuation is a very starting point of a company's journey, market's journey. It decides not only the pricing of the shares, but also sets out the expectations that the investor has. What are the impacts of the post-listing performance, and determines the dilution within the company. A wrongly priced IPO can do a very long-term damage, probably scaring off the investors or leading to very excessive promoter dilution. Hence, striking a very equilibrium for valuation is very crucial. One that justifies the risk of the investor and also preserve the promoter of the confidence. In India, there are multiple valuation methodologies that are used, but particularly we'll talk about how valuation methods are used for the SME IPOs in India. Unlike large companies or large cap IPOs that involves multiple investments or fundraise, SME valuations are generally done through a CCM based approach. When I say CCM, it is called as a company comparable methodology, which is also known as the market approach. But again, there are multiple other methodology as well, but CCM is the most widely used. Within this approaches of valuations for SME. The first method is called as the price to earning ratio methodology. This is perhaps the most widely used method, especially for profit making SMEs with a stable bottom line. Uh, the valuation compares the company's trailing or forward EPS with its similar listed peers, which are in the same sector or are of comparable scale, and then applies a justified multiple to it. For example, if your EPS of a company is rupees 5 and your benchmark PE of your industry peers is 12 multiple, the issue price or the valuation would be around 60 rupees. This method is very important and works well when the sectors has an established peer groups and the earnings are consistent. The second method is the EV EBITDA multiple methodology, which is ideal for companies with debt or capital intensive models such as those in manufacturing, engineering, or logistics. It really neutralizes the effect of different capital structure and depreciation policies, giving a very more normalized view of the operational efficiency of a company. The valuation is often compared to that of listed companies with similar business model and margins. Um, in the SME IPO space, the PE method is much more likely used, but even this can be utilized. While not commonly used in the Indian SMEs IPO space due to limited forecasting capacity, DCF, which is the discounted cash flow method, can be also applied for high growth SMEs, which involves projecting free cash flows for 5 to 7 years, discounting them using an appropriate weighted average cost of capital, and arriving at the present value of the firm, probably using key assumptions like growth rate, cost of capital, and the terminal value. So DCF is generally used as a supplementary method, but not a primary one whenever valuing a company in the SME IPO space. The net asset value or the book value method, the fourth. This is applied when the company is heavily asset based. Let's say companies, industries like real estate, infrastructure, or mining business, which values the company based on the adjusted book value of the tangible and the intangible assets after netting off the liabilities. While this is a very conservative method, it often really fails to capture the future growth or the brand value. Hence, it is rarely used alone. I was talking about the peer. The fifth approach is the peer comparable or the transaction multiple, which often relies on multiples of recently listed SME IPOs or private M&A deals within the sector. So PE multiples can be used, enterprise value to the EBITDA multiple, which aligns closely with investor sentiments and regulatory expectation. Especially useful when SME IPO markets are bullish or bearish. So within the SEBI and exchange guidelines for SME IPO, there is no prescribed method that this is how a valuation is to be done. However, disclosures are very crucial. The basis of issue price must be transparent. It should be defensible and logical. The stock exchange, NSE Emerge or BSE SME, it requires a detailed pricing rationale in the DRHP. It is valuation is never just a merchant bankers or the promoters exercise. It's sort of an audit trail. An unreasonable premium on the valuation can lead to rejection or delay in IPO clearance as well. I mean, there are challenges when we do SME valuation because SMEs present some unique difficulties when it comes to valuation, probably high promoter dependence, concentration of customers, often unaudited or irregular internal controls, or low corporate governance standards. Therefore, a qualitative assessment becomes very crucial. This includes promoter credibility, scalability, entry barriers, and customer stickiness. And in today's time, to secure a very strong and fair valuation, all the SME promoters should always ensure that there are at least 2 3 years of audited and stable financials. The EBITDA margin, the PAT multiples are improved and demonstrate working capital discipline. There's a credible growth story with data backed projections, which is benchmarked appropriately. We have to be very transparent about the risk, debt, and dependencies. Uh, in a very recent instance, SME IPO in the IT service sector raised around 28 crores at a 15 PE multiple. And it was justified using 3 listed IT peers, citing higher return on equity and customer retention metrics. And because of transparent disclosure and robust financial and clear rationale, the IPO was a success. It was listed at 40% premium. I think to just conclude it in a manner, valuation for SME IPO is not a very plug and play exercise. It really requires contextual intelligence. It requires rigorous benchmarking and conservative optimism. For promoters, it's a fine balance between fundraising and investor faith. But for investors, it's the anchor that drives the entry point and the respective holding decisions. And for the Indian economy, a well valued SME is a step towards deeper capital markets and entrepreneurial democratization. I'd be happy to take questions around this at the end. Thank you so
Thank you,
much.
Sanjit. Thank you, Sanjit. Thank you very much for explaining the valuation parameters in detail. Now I would invite Shivanshu. Shivanshu Vidla is a young entrepreneur and running the Cat 1 Venture Capital Fund in Makia Capital. So now, Shivanshu, give your perspective at the time of investing in any venture, which is SME, which may be going for SME IPO. So what criteria generally you or other HNIs and venture capital funds look at?
Sure, sure. Thank you so much, Manoj sir, for the introduction. And good afternoon, everyone. Good evening, everyone now. First of all, a big thank you for Pawan sir and entire corporate professionals team for putting this together. Always a pleasure to be here. Now, while most of the conversation today was around companies who need to go public, preparation, compliances, and disclosures, I'll just say that at the end of the day, it's all about raising capital, and that's what really moves the needle for the companies in the end. And when it comes to raising that capital, there are very few things we look at and very closely before we invest, right? We internally at Makia Capital have a 40-pointer checklist, which is very robust, that every company has to go through before we make any investment. But broadly, maybe I'll cover 3 or 4 things that I think matters the most to the investors that are coming on board, especially the anchor investors or QIBs for that matter. And I think we have already discussed these pointers in detail coming from Manoj sir. Sanchit covered the valuation bit as well. So the first thing that we look at is obviously the promoter vision. Okay. I think this is the biggest one, especially for the SMEs, because for the even larger companies, in case of main board companies with maybe valuation greater than 1,000 crore, those could be professionally run companies. But SMEs are it's all about promoter. And the two things that we can look at when it comes to promoter is the vision and the intent. And not just any vision. We would want to back people who are thinking 5x, 10x, and maybe 20x in next coming 2 or 3 years. And if you're really thinking small, right, it's very hard to build something big. So that's the intent behind that. And when it comes to promoter intent, which is the second thing, I think small retail investors, very high profile UHNIs are trusting you with their money, right? Raising from anywhere between 20 crore, maybe 100 crore. And we have seen some IPOs, SME IPOs, but 200 crore also. So that's when the intent matters the most, how you use that money to really scale your business. Second thing, apart from promoters, would now come down to business fundamentals that actually can hold up, right? We are not just looking at growth numbers. We actually ask genuine questions. What is the quality of the revenue? Are the margins very real, or it is just cosmetic? Is there any, too much debt sitting on the books? What are the cash flows for the business predictable? Is the working capital cycle very clean for the company, etc.? So we really have to dig down what the company really is. And just looking at the broader picture, you will also have to say, what's the market size the company is operating in, who are the competitors, and if the business has developed any moat in the industry that it is operating in. So yeah, in basically, we would want to know if things go a little sideways, does the company still survive and grow? And the third point that Sanchit also covered was the valuation bit. The company can be very great. It can be the best company on earth, but if it is overpriced and there is no upside left for the investors, you might as well skip it. And we always say to our promoters that leave something on the table for the investors, because someone really said it right. The stock market is a machine that moves money from the impatient to the patient, and we are the patient investors. And in the SME investing, that's even more true. fourth point that people generally don't talk about, but it is very actual in day-to-day decision making, is the choice of merchant bankers and anchor investors. It is very important to understand that the role of merchant bankers and anchor investors at the time of IPO. Okay, we have seen so many companies failing at the last moment because of lack of due diligence, or maybe merchant banker painting the wrong picture for the investors or the promoters. Right, it all falls apart at the last moment. And anchor investors, I don't think they are just check writers in today's market. If you come with strong anchor backing, not just people looking for a quick exit post lock-in, but folks who can really align with your vision, I think it really sends a very strong signal to the market. And it is sort of a form of an endorsement, really. But it builds trust to anyone, retails, QIBs who are participating in the IPO. And if I particularly talk about Makia, we don't just invest and disappear. We wait. We wait with the company. We are very patient capital. We actually help our portfolio companies to get orders, maybe connect with other portfolio fund companies of ours, and even build out strategic partnerships within our network. And we are not operators for sure, but we do like to be partners in the real sense. And we want to grow with the founder and not just profit from them. So yeah, and if I talk about investor sentiment overall, yes, global market has been a bit all over the place for the past 6 to 8 months, right? But I think India, to be fair, has done reasonably well in that context. And having said that, last 9 months haven't been easy for any investor or fund manager per se. But I think now we have been more choosy about where we would want to put in our money. And earlier capital used to chase founders, and now founders have to chase capital with better pitch, stronger numbers, and real execution. So that's what I can think of when to provide a investor overview on the SME ecosystem. Yeah, on to you, Manoj sir.
Thank you, Shivanshu. You have given a right perspective from the investor side to the promoters to the merchant bankers while taking decisions. As the time is already over, I think we have a few questions and we would like to run it fast. So first question is, I think, how to value, how come at the valuation? I think the question, I think Sanjit has rightly and in detail already advised. Shivanshu has also given a perspective of the investors. So considering those things, I think we need not elaborate any further. Next question is, can the purpose of the repayment for repayment of bank loan to reduce the interest burden be a purpose? I think that is the question. Yes, I think that is also covered, and that is clearly mentioned that one of the object of an issue can be to repay the bank loan or to reduce the burden. However, we have to take a judgmental call whether putting the money for the growth is better or to repay the bank loan is better. So that call need to be taken. But yes, this can be an object. The next question is, which is the major part and how to decide the capex of PAT? I think that is question is not much clear, but which is the major part? So decision has to be taken, I think, considering the need of the business for scale. So whether for growth of the company, capex is to be done, and what will be the impact on long-term basis for the business for the company. So, and obviously valuation is based on the PAT, as Sanchit was discussing. Generally in SME IPO, the valuation is based on the earning per share of the company, and investors want to look at the performance, past performance, actual earning of the company. However, if you are putting money for growth and putting new plant, new machinery, obviously the result will come later. So that is clearly understood. I think, Sanchit, you can put light on that. What will be the expectation if the money is going for capex? Whether the current PAT can be the criteria for valuation.
See, if the money is going for capex, definitely within the SME IPO system, valuation expectations are generally calculated through the PAT multiple only. And if there is a capex figure that is going into the figure, that will bring about a change in the future projected cash flow, which will be showcased in the PAT multiple down the years. However, within the SME IPO ecosystem, at the present way, the only way methodology is to utilize the peer comparison, taking into account the listed peers that are there and then valuing on that basis.
Right, Sanchit. I think at least institutional investors or large size, maybe family offices are well versed with the impact of the capex in long term growth of the company, and they can factor in. Obviously, as per the norms, we cannot disclose the projections of the top line and bottom line of a company in IPO document. However, if you are putting money for capex and growth will come over a period of 2-3 years, then certainly who are long-term investors can look into the facts and take care of your valuation expectations. I think one more question is relating to plant machinery building bought in the company as consideration for the issue of shares at market value or higher value. It has to be stated in the financial statement transactions must be examined to ensure no window dressing. Obviously, whatever information is being given should be clear, should be fair and transparent. And inflated numbers would create a problem. Obviously, it is a wrongful statement in the in the offer document, which can be a criminal offense also. So yes, we have to be very much careful about that. The last question I think is. I think it is a comment that the presentation should be shared with the participants. Yes, we will take care of that. I think if you have not got the mail in the last presentations, last webinars, I would discuss with the team and ensure that it is delivered to you. But you can access the complete content on YouTube channel as well as on our website. So the link may also be shared, right? Then one last question. If various segments are there as usual in a company, can these segments be in the subsidiary or holding company? Can be the SME for IPO or any other better company structure can be planned. I think all information in case of any IPO, whether it is SME or main board, is given on the consolidated basis. So a holding company can come out with the IPO to raise fund for the subsidiary. However, this disclosure has to be in transparent manner, how it will be utilized, and it should not be a vehicle to siphon off the money. So that concern would be there for the regulators. But yes, holding subsidiary structure is a valid structure. If the business genuinely requires a subsidiary or to create a downstream subsidiary, one or more, that is valid structure. And I think there is no question about that. So I think broadly we have covered all the questions which have been raised, and I think we have tried to cover everything. Radha ma'am has already left, but Mr. Harshad is there, I think. So just want to have his last comment if he is available as a ritual to close this process.
Yeah, so I think for the whole the session was very good. I think the way the which I think it will give a good to the market that how to go about it, because as a regulator we generally look at that the market should be educated and the merchant bankers how they draft the offer document is very important.
Yes.
That's why when we clear, as likely said by Shivum sir, that when they are also investing, they look into most of the things which are required, because we have seen that company is very good, but the merchant banker who are there, who are guiding them are not up to the mark. Then also we have seen that the disclosure in the offer document are not up to the mark, and then we have to return the documents. So it's
Right.
very important that when you are choosing the person also, you choose the right person when you're going with an IPO, because it's a very huge journey which you are starting from here, and there are so many investors who will be looking up to you, not just the market investor, but yes, the retail investors also would be keen and putting the money in your hard-earned money in the company to grow. So it's very like that company should look into it, and a proper disclosure will definitely will work for all the investors and a regulator also, so that the things move very fast and when we are giving the approvals also.
Thank you, Harshad, for taking out time and giving us a lot of insight from the regulatory standpoint for SME IPO, and it will be beneficial for all the companies which are planning to go for IPO, or as well as the intermediaries like merchant bankers who are helping the companies. Thank you very much.
Yeah,
Uh,
thank
Yes, thank you. And thank you, Radha ma'am. She's not there, but her contribution, statements and record would be helpful even in future. People can go and look at the YouTube channel and see what are the facts, what are the things regulators are looking at, BSC and NCA and NSC are looking at. I think closing, it's time to close now. So we will meet again on the next Friday at the same time at 4 p.m. With a new topic. And I think that will be circulated very soon. Thank you very much to all the participants and all the speakers here who have contributed a lot, including Radha ma'am, Harshad, Avinash. Avishkar sir could not join it, but we will miss his contribution, his statements. Anyway, thank you very much to all. Thank you for the participation.
Thank you, everyone.
Thank
Thank
you.
you.